why VA loans matter. These are the reasons why we love VA home loans and why they open the doors for so many folks. The biggest one, obviously, is the zero down payment. You can purchase a home with zero down. There's different loans like conventional loans, FHA loans for as low as 3.5% all the way up to 20% and more. But with this particular loan, it's zero down with no PMI. Chris, can you tell us what PMI is?
Yeah, so it's private mortgage insurance. It just protects the lender in case you default on the loan. The cool thing is VA, you don't have PMI. They don't require it. So you can put zero down. You can put 5 down. You can put money down if you want.
Right. It's just
but
not required.
You still do not have to. You still don't have to have PMI. I have a guy right now in El Paso that I'm closing Friday. He's buying a $1.2 million home, but he's putting down like $700,000 because he's selling his other home. So you're able to put money down if you want, but you don't have to.
What is a typical PMI range? Is that like $500? Is that $100? Is that depending on how?
Do you mean like with a conventional loan?
PMI.
So
break that down for me.
That's a really good question. It deals with your DTI credit score.
Debt to income ratio.
Yeah, sorry, debt to income ratio.
Sorry, the jargon.
It depends. It really depends on, loan to value, all that kind of stuff. Ran one for a conventional guy yesterday and it was $50. It wasn't much, but I have ran them before. I have another guy that I'm running in Houston right now and his PMI was like $225.
Right.
And so we're probably going to switch that up and go with an FHA product because it'll be lower for them. But long story short, it's a big range. You just never know.
That's a huge differentiator between a VA loan and a conventional is that there's no PMI attached to your loan. So that's up to several $100s in savings using this loan. The other thing is that you get lower interest rates than conventional, right?
You do. Yeah, you do. I like to say that our rates are very competitive with, Navy Fed, Veterans United, all those kind of places. But the one thing that separates us from those people is we don't charge an origination fee or lender fees.
Huge.
I can charge you an origination fee and get you an even lower rate, but typically I'm like, I don't want to do that because we have something called an IRRRL, and we'll talk about that shortly. But long story short, the rates are, pretty competitive across the board with a VA loan. I like to say they are pretty much in line with FHA rates, but they can sometimes be a little bit lower just depending on the profile of the application.
Flexible credit options. With a conventional, there's pretty strict guidelines. However, with the VA loan, the credit options are a little bit more flexible. Talk about that a little bit.
They are. So every mortgage company will have their own underlays or overlays that we call them. And what we the lowest credit score we typically do with the VA loans about 600. And we get a manual underwrite and all that kind of stuff. Yeah, we can, depending on the profile of it. That means like we can go in and take other compensating factors and manually overwrite the loan. But with that said, we stick around 600. I've seen some mortgage companies go lower, but it's just depending on that company and their terms and what they want.
So an average, so you go as low as 600. What would that be if it was a conventional loan though? So what would the lowest score be on a conventional loan?
It's so hard to say because it's the profile of the application. So if somebody has a bunch of assets and other things, it's but I mean, I've gotten conventional approvals with, a really low 600 score. But like I said, they might've been putting down 50, 60%, stuff like that. So it just depends on the profile. We have a saying in mortgage that no file is the same. Everybody's different.
Yes.
Occasionally you will get, a couple files in where people have 800 credit scores and putting down 20% and they make $300,000 a year. And it's like, oh, this is, there's really no worry to this, but most people, every file is completely different. Nobody is ever the same.
I think the biggest factor is the debt to income ratio is a little bit more
lenient.
Correct?
I'm glad you brought that up. Yeah, so we're able to go up on a higher DTI with VA loans for sure. So let me explain that to you real quick. So on a conventional loan, we want to keep the DTI at around a 49.9, so about 50%. FHA 56.9 is kind of the max on the back end with that. A VA loan, we can go up higher But like I said, it's one of those things where we have to run it through the system and see if we get an approval. Every file is different. You just don't know. Your
Sorry.
DTI, guys, for people that don't know what DTI is, it's your debt to income ratio. So it's like we take all of your debts and then we come up with a percentage of what your debts are, with your monthly income. And then that's the front end, and then the back end of your DTI. So that might be like a 15 or a 16. And then we add in your house payment with all those debts with your income. And that DTI could be at a 33. So it's a 15 and a 33 front end, back end. That's a pretty good file. That's what I mean by debt to income ratio. It's all of your debts plus your housing payment. And then we come up with a calculation for that. And then
compared to what you make.
Yeah.
And then we're going to go into what the IRRRL is a little bit later, but that's on the list because it's one of the main benefits of a VA loan. So we'll talk about that later.